I'm really curious, Mark, what you think here about the changes you're seeing in Italy, what it means for the cross-asset story. When you look at what's happening in Italy, what's happening in the UK, is there something off about the trades that you're seeing?
So in terms of Italy specifically, we've actually thought that Giorgia Meloni and Party Fratelli d'Italia, they're saying and doing the right things for the time being. And if anything, I think that there'll be a sense in the short term that political uncertainty goes down a bit. So we've seen sort of BTPs relatively stable on the back of that. I think our concern sort of more structurally, though, pertains to the growth outlook for a country like Italy as we head into 2023. All of Europe's in recession. It looks like it's going to be a really ugly recession next year in Europe, and Italy is clearly badly exposed. Given the situation with respect to gas.
Yeah.
And this sort of combination of a weak economy and higher interest rates is the sort of thing that potentially exposes the weaknesses at the heart of the euro. And here, Italy is very much on the front line when it comes to fragmentation risk.
Mark, where's the line in the sand where sustainability questions get asked? We're at 4.8 now. Is it 5%? Is it 5.5%? Where's the line?
So it's difficult to discern a magic line because at the end of the day, when it comes to debt sustainability, Italy has got a fairly long average maturity of its debt. So your debt sustainability is only sort of questioned gradually. But I think it's more if we suddenly see a shock and an increase in volatility. Because the issue that I have is I'm not sure that the TPI will be a very effective tool, or it's effective if it's not deployed. But if it's actually put to use, then I think it could be very problematic. So yes, if yields are going north of 5%, that will create some attention. But I think that probably the big short BTP story may be more a story for 2023. Actually, in the short term, a lot of people are very bearish Italy. A lot of people are short. And actually, if the political news is a little bit better, you could actually see Italy maybe trading a little bit better in the next couple of months.
Is the risk of a gas shutdown, a Russian gas shutdown, priced into the markets here? And how big of a risk does that pose over a multitude of assets here for Italy?
Well, I think that we already know there's no more Russian gas, right? The Nord Stream has gone, and Europe's not getting no more Russian gas. Thankfully, reserves are largely full. I think speaking to the guys at the Commission in terms of the Energy Agency, I think the main fear is if we have a really cold winter, a statistically cold winter, and we will see further restrictions, further curbs, more blackouts. But the big issue is that fundamentally, with energy prices where they are, there's a big chunk of the European economy that just can't produce. We're going to have no steel, no aluminium, no fertilizer, no chemicals, because it's just not economically viable at these sorts of levels. So the pressure is going to be on the European economy. And if things go badly, I mean, the question is next year, is growth -1 in Europe, or is it going to be -3, -4? We could be looking at what would be the worst recession since the Second World War if things do go badly. And if that happens, sadly, I'm afraid Italy is at the front line. Italy is likely to be exposed to a test by the market.